Hi, and welcome back to the One Stop Shop Mike Mohel YouTube channel. I'm Shanielle, and I'd like to thank you for joining us today. Now, today we're going to talk about life insurance. It's a very important subject that not a lot of people like to talk about and not a lot of people know about. So just to give you a brief history on life insurance and how it began somewhere in ancient Rome. A military leader created a burial club and among the troops, so that if in the case of it or event of an unexpected death, that the other troop members or the other members of the group, the burial group, they would then fund the funeral cost. Now, later, this tradition was adapted in the USA, the United States of America, in the 1700s with the sole purpose of being a relief fund for widows and orphans of the deceased. And they were members of the Presbyterian ministry. This also spread out to other other spiritual institutions or religious institutions, and other groups were formed, and these memberships became what were held as policies or life insurance. And many churches and religious institutions who offered these memberships, they became insolvent after a while. That means they could no longer afford to pay the death benefits based on the membership fees that they had been collecting. Now, long story short, because of the failure to pay the death benefits to the members, the government had to step in with regulations, and life insurance companies were formed. So from that, these regulations also prevented these other religious organizations and different groups and members from offering these types of memberships or policies for death benefits. So those were ended and insurance companies were beginning. Some may ask, why do I need life insurance? I'm young. Or I have it through my job, so why do I need to have more? Which are very valid questions, and I'd like to address those today. Now, let's start with the latter. I have it through my job, so why do I need more? Well, with the job, most full-time employees are automatically offered a group policy. That group life policy is going to allow you to pay minimum premiums while getting the maximum amount for life insurance. So you're going to get a lot more in death benefit, and you're going to pay lower premiums. And it's a great way to get a lot of coverage for less. Although this policy is a term policy, it won't require any medical underwriting. Typically, most term group policies, they're only term group policies, but most group policies, there will be little to no underwriting. So they're not going to look at your past medical history, which could work in your favor, because if you smoke or if you've had any past medical history, then that won't be affecting your life insurance rates, which typically when you get an individual policy, those will affect your rates. However, if you're not a full-time employee, most likely you're not going to be eligible for that group policy. And also, even if you are eligible for the group policy, when you retire or if you leave the job, you're going to be responsible to pay outside of that group rate, which is going to be a lot more expensive. And 9 times out of 10, you'll be subjected to medical underwriting, which could also change the rate or get you table rated and give you a more expensive cost. Now, I would like to give you an example. Let's say a 65-year-old man named Joe. He's been paying $30 a month for the last 40 years for his $200,000 life insurance policy. Now, that's what the rate that he's getting with his group. But when he's ready to retire, he has to go into an individual rate. Now, if he tries to get the same policy for $200,000, it's going to now cost him $300 per month. So what does Joe have to do? He's retired now, and he's going to be living off of his pension. What usually happens is the policy is dropped or canceled. And then Joe, he's going to end up buying a final expense policy for burial, which is a whole life policy, but it's going to be still more expensive, and it's only going to be $10,000. And most likely it's going to be paying around $100 a month. Now let's address the topic of being young. As being young, I'm young, I don't need to purchase the life insurance. being young is the best time to purchase life insurance. You're going to have more options, better cost, and more time to make your life insurance work for your life. Now, many believe because they're young, they don't need coverage, they can wait till they get older. But what they don't know is that if they get life insurance now, that with a limited pay life or a whole life policy, they're going to accumulate a cash value that they can borrow against in the future. This can be used towards many of things or anything that you like. This cash value is yours to be accessed. You can borrow from it and you can pay it back, and it's going to continue to build that cash value even when you take money out. Now, anyone can purchase this type of policy, but age plays a major factor in all of the ratings in any life insurance policies. So, the younger you are, the better the rate, the lower the rate. And with whole life policies, you can even get a limited pay life and lock the rate in for life or pay it off early. So it'll never change, or you just pay it off at an early date. That's why it is so good for young people to purchase policies, because there's a large benefit in it if you purchase the right policy at an early age. Okay, let's talk about the two types of insurance that I mentioned today. Let's talk about term life versus whole life insurance. There's several other products out there like Universal, but we're going to stick with these two today, and I'll come back and do another video on the other ones. Now, term life and whole life, they're both very good life insurance products, depending on what you actually need at the time. Now, term life insurance offers fixed payments for a limited time, and after that time, the policy expires. The payment will either increase, or you may forfeit the policy and try to get a different policy. According to Penn State, they did a research or a study back in 2018. 99% of term life policies never pay out, and one of the reasons that they give is because people tend to outlive the term policies, and by the time it's time to renew at the new rate, they can't afford it because they're at an older age and it's more expensive for them. So term life it can be used if you have small children and you just want to have an additional coverage until those children are adults. Then term life is an affordable option to get a large amount increased coverage for a period of time that you choose. You can do 10, 15, 20, or 30 years when it comes to term life insurance. Now let's talk about whole life insurance. It offers a fixed payment for your entire life up to your age of 99. At this time, after that age of 99 passes, the policy is going to mature, and you will receive the death benefits plus any cash value that's accumulated in that whole life policy. Okay, now with whole life, the premiums are usually quite more expensive than the term policy. They're usually a lot higher than the term policy, but they also have the living benefits, and I talked a little bit about that earlier. Now, let's talk about the whole life limited pay policy. This is a whole life policy that you only have to pay for a minimum time or a limited time. That's why it's limited pay. So it can be paid up to 10 years, 20 years, or up to age 65. At the end of this time, you never have to pay again in your life. And you're going to be covered with life insurance for the rest of your life as long as you're alive. Not only that, but the wonderful thing about the limited pay life policy is that your policy is going to continue to gain cash value. It's going to build a cash value accumulated that you have access to. You can borrow against this cash value. I know that one bad thing about the cash value is once it gets too much, it can change your life insurance policy to a modified endowment contract, meaning that the government can tax this policy. Any life insurance policies and any cash accumulated in them under the MEC value, then they are tax-free because they're considered still life insurance policy. So I hope you got a lot of information today. I'll come back and make more videos. I hope you found the value in having a life insurance policy, no matter what walk you're at in life. I'd like to thank you for being here. If you have any questions, please feel free to email us at onestopshop368@gmail.com. Please hit like, subscribe, and share this video. And I'd like to thank you for watching. Bye-bye.